When should you lock your mortgage rate? Well, this is a very good question, very misunderstood one, and we see a lot of problems with this today, so we want to address that and give our feedback as to what you should do and understand. So first and foremost, always get a second opinion. So don't settle on one lender or one company. Make sure you're shopping your loan before you lock a rate or even during that process, but make sure you get a second opinion. That's first and foremost. After that, it's good to acknowledge what the rate lock is. So generally the rate lock is going to be tied to a loan application, which includes a property address. So if this is a purchase and you enter a purchase contract, you then have a contract with the seller, you know the closing date, you know how many days you need to lock. So if it's a 30-day escrow, a 30-day lock or more, same with if it's a longer escrow, your lock needs to cover through your closing date and not short of that. But also the longer your lock, usually the pricing is slightly worse. So it's important just to know that. Now, if it's a refinance, the lock makes the loan. So you're not going to apply for refinance unless there's a benefit and you lock that loan immediately. So 100% of refinances should be locked immediately in most cases. On a purchase, I would say the same thing. Once you're in contract, you should lock in that rate. Now, a loan originator should be tracking the mortgage-backed securities market. They can see what's happening during the day, so they could tell you, hey, we might want to float it out and see if we can get a reprice, which might improve the cost or credit based off each rate, or improve rates slightly before you lock. However, speculation is the only thing everyone's going by on the following days. Now, there's economic reports and things that come out where you could speculate. However, if you lock the rate, you do have the ability to not only potentially change it on the rate sheet you locked if you change your mind on whatever rate coupon and the cost of credit you choose, but also there's renegotiations and float downs. So most lenders will allow you to, if there's positive movement after you lock, to float the rate down. But if you float your rate, you have unknown terms. You have the payments, the fees, everything can change. And we're seeing a lot of loan estimates that are sent today that are wrong. They're floating rates. Once you have a floating loan estimate, it's expired and that lender's not bound to those terms. And that's the most important thing to understand is we're seeing a lot of inaccurate LEs being sent on purpose and people being counseled not to lock their rates for special interest to maybe a lender they work for and not for the borrower or the consumer. When that lender hedges and they lock that loan for a certain period of time, they know that they might lose that loan if they're not competitive. And so they're holding to lock that loan. That's what we're seeing, at least right now. That should never happen. It's very important that you're protected by a rate lock and still watching the market just in case there's any float downs, but you need to protect and not speculate your payments and terms once you're in contract. The last thing you want is to get in contract, go through inspections and all these things and invest this money and all of a sudden your rate's up a quarter or whatever it may be. Don't take the risk. There's too much volatility in this market and you can get counsel on the mortgage-backed securities market. We'll share some graphs on what volatility, such as like year-to-date shows, but always lock your rate and this graph will reflect why you want to lock your rate for those that don't. So if we can help you in Oregon, Washington, or Idaho, please reach out to us. We'd be happy to give you a rate quote, give you any information that's helpful, and we appreciate it. Thank you.